derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. It is Friday, June 4th. Non-farms payroll. We made it. Nothing has happened all week. Uzi says it right there. Epic jobs report. By the way, I need to make sure I do like a good intro. Hi, I'm Speculator Seth. Welcome to my trading session. And we're here every day from 8:20 Eastern time. Let's go to the charts. Watch this. This is going to be the shortest charts ever. Okay. ES, nothing happened. Treasuries. Actually, there was actually a pretty good dump yesterday in treasuries. All right. Oil kind of not doing anything. Gold took a dump yesterday, man. It was a little ugly, gold and silver, but yeah, they're recovering. It's okay. Copper definitely took a dump yesterday. That's pretty ugly there in copper. I should check here really quick. We don't have to do any rollovers here, do we? No. Okay. And that's it. Sideways market. Yep. So let's talk about the numbers that we're looking for here. U.S. non-farms payroll, the median expectation is 674K. I'm hearing whispers of 1,000. But there is a little bit of a dichotomy. The Goldman Sachs guys think that it's going to be 700, and that's about what I'm going to be going for. But there's a couple others that think that it's going to be more like 500. But let's remember that, like, we've had times where we think that it's going to be like 500 and then it's negative. So I don't know. I've never used this feature here in Financial Juice, but I'm going to try and do it again here with the non-farms payroll. Let me set up alert. Set up a buy alert when actual is greater than 700 and a sell alert when actual is less than 600. Save. Okay. So we got an alert set up there. And if I do anything, I'm probably going to try and do it in the treasuries. Unless I really think that I've got a swing. Unless I really think I've got a swing, then maybe I'll do it in the E-mini. But these are better played in the treasuries because of the liquidity, right? So I'm going to bring that down. And what else? There wasn't really any news overnight to talk about. I should take my phone out here. Oh, yes, I know what I'm missing. I need to turn on the text-to-speech. Now, another thing that we need to keep an eye on is the earnings. They're looking for a 1.6%. I didn't check the crypto charts. Oh, they're down, aren't they? Look at that. I think one of the things that's going on in the cryptocurrency world is that there was Dogecoin is going to get listed on Coinbase this week, right? So I think that some things were pumping up a little bit for that, but it's like it's already petered out. Like, people have already figured out that it's like you pump it going into the listing and then you sell it. Like, have you noticed that with the cryptocurrency market lately? So, like, Garlic Coin is like the one thing I've seen in the cryptocurrency space, ironically enough, that didn't do this. But it never took off. Like, it came off of like its lows and everything, and it was like 100 times winner of sorts, but it that was just it kind of coming off of like being valued at nothing. It wasn't like a real true pump, like all these other ones. All these other ones though, what happens is like you go and you start a new coin. You give yourself a ton of the coin and you get all of these influencers to pump it. All these people buy into it and then you sell into them as soon as it comes out on the market. And this happens over and over and over again. And all of the coins that are like really taking off, that are like really getting the attention, this is what happens to it. And then you get dumped on. Elon Musk taught the young generation how to pump. Yeah, it's just, the thing is, this is why, one of the reasons why I focus on that, the square root law of market impact and the sign change law, because those things basically tell you that unless you can create the asset, like unless you like made it and you were able to acquire the thing for literally nothing, unless you do that, this is not a winning trade. So like the pump and dump thing is not something that you should try. You're always going to lose at it. But the millennials, they don't get it. They think that the market is just that, is all these big guys pushing it around to a certain spot. And I don't think that they realize that, like they said, oh, they're pushing it down to 30,000 so that they can accumulate more. They don't realize that like the amount of money that I spend on pushing it down and then buying it back up, I might as well have just bought it where it was. That doesn't work. But whatever. Non-farms. Move that over. Oh, I did turn you guys on. There we go. And move this over to TweetDeck. So got to remember here that the earnings, we're looking for 1.6. This is anticipated. Look at that. They pulled everything. 10 seconds. Oh, I need to turn that off, huh? Okay. Okay, 5:59. That's not what was supposed to happen. I can't handle it. Okay, so it was 5:59, so it was a sell. It was a risk off. I thought I could get away with that one, but it didn't work out very well, did it? Dollar is gonna get crushed here, man. Look at this. Okay. So when I go through that, I'm wondering now, was it NinjaTrader that caused the slowdown? I should probably, next time that we have a big number like that, I should probably have my system resources up, because I definitely had some issues there, right? But like the Jigsaw DOM continued to update correctly. It was just like, didn't seem to take the orders well. So this is a low number, but it's not like last month, is it? And the average hourly earnings was 2 versus 1.6. Overclock the CPU to the max for NinjaTrader. While I'm thinking about it, I was thinking about the whole, it's time to move brokers. Should move to Edge Clear. I still want to do auto trading through NinjaTrader. Like, that's the big thing. I do prefer NinjaTrader overall, but I don't need to use the NinjaTrader license or execute with NinjaTrader. You know what I mean? So I'm thinking, like, I keep talking about starting my own platform. I'm wondering if what I should do is try to interact with the Rhythmic API directly. So I should I'm going to ask them about that. Bart Smith tweets, Rick Santelli got it, and of course Steve Leisman clueless. I think that if you were talking about a number, that you would have to prefer Rick. But I thought that it was going to be 700, right? I was kind of leaning towards the 700, right? Construction employment down 20K in May, mainly due to 17K drop in non-residential specialty trade contractors. Despite the housing boom, construction employment still down 225 below February of 2020. Supply constraints are not great, Bob. Yeah. Well, so the issue that I have now is the number was bad. The market's reacting to it pretty strongly, but I don't think that I have something here that's going to like run all day. You know what I mean? That's not going to be like last time. There's going to be a move, but it's probably going to be somewhat constrained. And how we actually have to value things come from here on out will matter a lot. The bonds though probably haven't even begun to factor this in though. I'll do one more. It's kind of funny how like the number was bad and the S&P 500 likes that. It's so fucked up. It's so messed up. It's like, oh no, people aren't going to get more jobs because they get paid more for unemployment, and the S&P 500 loves it. Have fun with your supply constraints, folks. If the market cared about numbers, why did Tesla rise from 200 to 2,000 before the split without achieving anything? It's totally, I mean, like, here's what we got to remember. What is our model of markets? Because the null hypothesis was always markets are efficient. The efficient market hypothesis. And so market prices factor in all currently available information. It's not true. We know it's not true. It's basically, it's been proven false. People are able to do things they shouldn't be able to do if markets were efficient. So we go to an alternative theory, and the alternative theory that I subscribe to is that markets are moved by order flow. Markets are moved by order flow. So in that particular case, Tesla, well, the stock split created news, and everybody believed that that was going to bring more people into it. And so they all bought it based on that theory, and that created order flow, which moved prices. So the market tries to be efficient, but order flow and certain things about the book can push it away from those areas. It can push them away from those areas for quite some time. Okay, so the treasuries are back to like the news price, squeezing that upside out of a miss when calling for a beat. You love to see it. Okay. Santelli nailed the non-farms payroll number and was way under all others. Non-farm payroll guesses on Squawk CNBC. His edge, he went bowling last night and saw oodles of help wanted signs posted at venues around the alley. My theory is the market moves through pain. They wanted to squeeze shorts at the worst prices. I mean, Tesla was the most shorted stock. I don't know if it still is. Well, I think that an explanation. So I think the issue with using that as the basis of the theory is it doesn't always do that, right? So, like, I think that when you look at it from an order flow perspective, you're gonna realize that, oh yeah, well, if people have positions on in a certain spot that they're gonna get stopped out, then the way that the order flow ends up going is there's just going to be a tendency for it to come down and hit them, So like this, the Tesla here again is like a perfect example. So if Tesla is overvalued and everybody knows it, and everybody is already short, where is the order flow to push the market down going to come from? Because everybody's already short, right? It doesn't happen. And so in the end, somebody gives up and buys it, and that moves it up. And then that trigger stops, and then it keeps going, So this is kind of interesting. I'm wondering. So when I took this, obviously I'm on the YOLO account, but when I took this, I was thinking, okay, they could come down and then they should bounce back up again. But it's just kind of sitting there now. So I'm kind of starting to wonder if, even though it was a big number and there's going to be a lot of discussion about it and everything, I'm starting to wonder if it's going to have a lasting impact on the market price. Because it seems like that number doesn't really change much, like like the null hypothesis, I think had to have been that the Federal Reserve is going to be weary. Should we say it that way? Be weary about raising rates and is going to be dovish, and they're going to wait for the employment to come up. And I think that the null hypothesis was already, although it was very hotly contested, I think that the null hypothesis was already that rehiring was going to be slow until the unemployment benefits rolled off. You know? I guess the thing that this does change is that last time around, the Democrats fought really hard to say, oh, no, it's not that. It's not that. It's just you guys aren't paying enough or something like that, right? Well, now I think it's pretty undisputable that hiring is low because people are staying on the unemployment. No question about it now. Well, they're going to try and argue otherwise anyways, right? So it'll be interesting to see what their argument is. Bob says, what's up, y'all? Hey. No, I don't think this is really playing out the way that anybody really expected, though. I think that a lot of people, myself included, were expecting to see like a real, blowout number of some sort that really roiled the markets. And what we're getting is so much more nuanced. Although certainly negative, the U.S. dollar. The U.S. dollar is the one thing that really has conclusively moved to the downside and is staying there. Local leaders build pressure on Joe Biden to cancel student loans. Good luck with that one. That was a pretty big iceberg at 21.5. That they had to get through. That's interesting. I wonder if you had some guys that went long and they just were like way oversized. You know? Market Ear says Volkswagen crushing Tesla. Student loan outright forgiveness would cripple Americans further. Change my mind. It would definitely be bad. I mean, I'm not sure what kind of immediate economic effects it would have, because those are government-backed loans and everything. So I don't know if there's somebody that like immediately blows up. But what would happen for sure is there would be very negative social consequences from that, because you can't turn around and you have these people that their whole life was centered around being able to pay for going to college and doing that, and then paying back the loans and trying to get into a smart industry and everything. And then you have these clowns that come in, pick terrible majors, don't plan for it at all, and they're rewarded for it by the government. Yeah, that would create like such a toxic social environment, man. Joe Biden canceling student loans would be a total disaster. I think that alone would crater their chances next election if he did that. I'm actually starting to think that they've already cratered their chances next election. Like, you wouldn't know it from the polling, right? When you go and you look at the polling, they say, oh, he's the most popular president since XYZ, whatever, right? I don't think what they're seeing something that isn't really being well reflected yet is that the people that were not for Joe Biden are very unhappy right now. There's like, you go around and you look at the landscape, especially on the foreign policy front, and everything that they see makes them disgusted. It's not just like, oh, well, I don't really like that. It's like everything that they see is like, this is just that one thing alone would destroy this country. And you're doing all of them, right? So, yeah. And then you go and you add on top of that the student loan thing. I'm sure that all the millennials would be really happy, but I don't think it would be good for them politically. Yeah, you can't give the finger to people like me who didn't take the government for college. Exactly. More so than that, though, the other impact would be that the cost of education would just go up more. You know, does it seem like finance is on a knife edge? Like back in 2008, I don't see that actually either, Adher. So, we're certainly in an interesting financial environment. This is going to be a time period that people will be studying for the next 100 years. What's going on in the financial space. So if we don't completely understand what's going on, or we feel lost sometime, I don't think we should feel bad, you know, because it's just a really strange thing, and we're going to learn a lot about markets. We're going to learn a lot about how certain dynamics work, but I don't see something that is like an immediate risk-off event. And in fact, and everywhere that we see something where there's like need to be concerned, the markets back away from it, right? So like the one place where I think that there is a greatest risk is that there is inflation, and that bond rates start rising faster than the market can handle. That's the biggest risk for sure. And here we just got with this non-farms payroll. Like, that's not going to happen, right? These bonds are going to kind of be stuck in this range now all summer probably. And it's not going to be until after the summer that maybe the Federal Reserve gets to talk about tapering. And that kind of also depends on what policymakers do in regards to the jobless benefits. A lot of states have canceled the jobless benefits. I wouldn't be surprised if many more do that after this too. So that'll just bring things back in line. It's like it can be a non-eventful recovery. But one of the things that you got to remember is that these risk events, we've got to think of them as tail events, right? Like the coronavirus panic was not something that you're going to see very often, right? And is result in huge changes in the markets that are difficult to predict. It's a tail event. Well, when you just had a tail event, you're going to get a lot of people looking for other tail events, essentially, right? You get a lot of people looking for other tail events. And so you always get, especially after these things, you get a bunch of doom doctors getting on the TV saying, well, here's this risk and here. And so the risks are like really, really forward in your mind. But you just got to remember every time that they say that like it's a tail risk event. So in order for those things to happen, like a lot of other things would have to happen too. And here you're just seeing it right now. Like every time that we come to one of those steps, we don't move closer to it. So you kind of end up in this Goldilocks zones, at least for the stock market, where it's really it's really hard to have like a really bad thing happen. Yeah, big tech has suspended Informed Consent Action Network after it announced it will release 3,000 more Fauci emails. Can you believe that they did? I can't believe that they did that. That one, I'm actually kind of wondering if they backtrack on, because that's pretty crazy. I'm doubling all my shorts. That doesn't sound like a... All three legs of the financial store getting bent over Biden's barrel? Everything except for the dollar is moving up, dude. What are you going to short that's going to make you money? I guess you could short Tesla. Good luck with that. Within a year. Maybe. Oh man, I don't normally think about sports, but the Utah, who I really like this Utah Jazz team, and you know what, I would be watching them, except for that I'm kind of like a little miffed at the NBA in general right now because they're getting so political. But also, it's hard to get it on TV, man. But I do like my team, the Jazz team, and this Donovan Mitchell is like great. Like to me, Donovan Mitchell is like Michael Jordan, except for that he's a really great guy. Like Michael Jordan was a douche, but this is Donovan. He is a great guy, and they just crushed it here. And meanwhile, the Lakers, LeBron James got they didn't get swept, but they lost 3-1 or 4-1, whatever. He's already out. LeBron is already out of the playoffs. The Lakers, just like, and you know what? I was never a fan of LeBron. Ever since he did that thing where they made the big announcement and they went to Miami and everything. Ugh. Hated that. And then, oh man, everything else I've never liked LeBron. And then going to the Lakers, I've never liked the Lakers. The Lakers are always jerks. Shorting Lehman Brothers there. Nah, I don't think that you go and you be I don't see a short here. Even like far off in the future, to be honest with you. What I see is like an environment where the S&P 500 will continue to be slightly bullish. Returns will be lower than we are used to. Markets will start to become extremely constrained. But they will just they'll go up, and then every once in a while you'll get like a panic where things kind of come back really quick, and then it'll just continue on slowly going up every day. And meanwhile, everything on the supply side will be showing a huge pressure, right? That they're doing everything that they can to pump out as much product as they can, and just everything's working against them. So I think I want to continue to be long things like silver and gold and commodities of any type. Oil probably is still okay. Copper is probably still okay. Copper going up off of this, by the way. Lumber, maybe I'm not so sure. I think that one was a little overdone. Okay, so they moved down pretty hard there for a while in the treasuries, but they are coming back up. The 5-year has already beat its high. If I come back, so let's come back and do a little bit of analysis now. So the thing that we've got to figure out is, where do we value this from, right? Well, I think that here beating out yesterday, this kind of area from where we started at yesterday, around 27.5, yes, that should happen for sure. But now, can we come back to there? Yeah, I think that even the high would be justified. In fact, any high during the week, I think, would be justified. So we might even see 050. And now, of course, I can't price it in. Like, I wish I could like calculate it. So I just kind of have to guess based off of past action, right? But then there's this gap right here, right? From the rollover. The rollover here was down because, and I think that this was again because they're expecting that, rates might rise more than they expect and everything. So yeah, so could we get up to 132.20? Well, that would be a really difficult move to happen in one day. But yeah, we could get up there. I think so. If interest rates go up, the market comes up, but they're not going to be going up, not for a long time. If countries keep stalling their debt purchases, the market comes down. The dollar is being printed into non-relevancy. Well, I mean, they're tapering off though. Like that's the thing that's nice about it, is that the Federal Reserve doesn't have to do anything. The big crypto call of the year will be made here. Well, they are up. So they were at 36 on the cryptos, and this news did move cryptocurrencies up. I don't think that it's really going to be a major factor for the cryptocurrencies, and I'm still kind of thinking that they're going to fail 30,000 at some point, but I'm a crypto bear. At least I am right now. I don't like to consider myself a bull or a bear. I just do what the model says to do. And the model says that Bitcoin was overvalued and that the cycle is going to end. 5K dreams. Well, when we were looking at it before, it was like it could get to 15K. It might be a little bit higher than that now, but I don't know. Here's the thing is, I don't think all of the bad things that could happen in crypto have come out yet. This reminds me of 2017. There's some revisionism going around with 2017, okay? Everybody acts like 2017... there was the big crash, and then like that was it. Like everything ended all of a sudden, and it was just this really bad bear market, and it was in a bear market for a really, really long time, and everybody ignored it up until now, and then finally it picked back up in another second. No, that is not what happened at all. Okay. It came down. It fought it every step of the way. They tried to keep it propped up. They couldn't keep it. They tried to hold it at that 6K level for a long, long, long time, and they bounced it off of that like 20 times until it finally gave up, and there was like a real washout. But then after that washout only lasted like a day, and they were right back up, and there was another run, I think, to something like 15K, right? In the summer of 2018. Okay. And then I said that one was overdone. So I sold that one, and I was right. And then what was after that? And Oh, and then they came back to the 6K again, and that was when they bounced off of forever and went through. And then there was another run kind of got started before 2020, and then the pandemic just absolutely destroyed them on that one. When the pandemic came along, Bitcoin just got destroyed. Like, you know what I mean? They fought it for a long time. So I think that you're likely to see that again. Like these dynamics are going to continue to play out, especially with Tether still around, because Tether can basically just continue printing money. So you're going to see a market that at times looks really, really bullish, but fizzles out. You know, now I wouldn't be surprised if in the later part of the year, because the most bullish time for cryptocurrencies is usually in the third and fourth quarters, right? So I wouldn't be surprised if we see another run during those times. But you got to look at the public sentiment. So there was a TikTok post where this guy was saying, if you talked about the US dollar like a cryptocurrency, like nobody would want to buy that cryptocurrency, which is really a fallacious argument, right? Because the whole thing is that these guys want to get away from the dollar. Okay, so they believe things about what makes a good currency that are contrary to what actually makes a good currency, like the dollar. So I came in and I said, oh, it's almost like currencies are meant to be used and not just held. And I expected that everybody would hate me for that one and that I'd get like a lot of hateful comments and stuff. But I got tons of likes. I got so many likes on that comment. And it's really annoying because every time I go into TikTok and I think, oh, I got notifications, this is good. Nope. They're just more notifications about that. So there has been a sentiment change in the larger public. They are understanding the problems now. Okay. So like Elon Musk didn't just make them aware of the problems with the energy consumption. I still think that the average person does not appreciate the issue with the memory pool not being large enough and therefore you not being able to carry out enough transactions. It's a really big problem for them. Okay. I don't think that one's fully appreciated yet, but but then it seems that people are also understanding the issue of like that using something like Bitcoin as the basis of your economy when it's deflationary is like really bad. That wouldn't work. Like literally wouldn't work. And it seems that normal people are starting to understand that because I'm seeing it on social media now, more and more people saying these sorts of things. What are you trading? I have a long in the 10-year. You see here on my DOM how there's these numbers off to the left? That's like my profit and loss at each point. So I'm not trading live here, but what I did was I started averaging somewhere around here. 21.5 was like my average entry point. And then I built up a little bit of profit, took some of it, and now I'm just letting the last contract run. BTC is not meant to be deflationary. It's meant to be stationary. It doesn't matter what it's meant to be. It's deflationary. Like, do you understand the issue there? Like, I don't think that people appreciate this. Okay, economies change, monetary conditions change, the world changes, and if you have a currency that has a set amount of being created all the time, and it cannot change based on those conditions, then that's a real problem. If there is a recession, you need the ability to get cash out to people so that they can start rebuilding things, right? everybody complains about the Federal Reserve printing money. They're like, oh, they printed this many billions of dollars. Yeah, guess why? Because that's what the models say is the amount of money that they need to put out there in order to keep the value of things stable. Like, that's how bad it got. But you look at it like, the reason that prices are going up isn't because the Federal Reserve printed so much money. It's because there's supply constraints in almost every instance, right? Models have nothing to do with their. Well, I'm just saying the Federal Reserve looks at a bunch of financial conditions things, and they're really good at it now at this point, and they know how much money is required in the economy to prevent deflation. Essentially, they know how much they have to print. But printing is as unsustainable as the Bitcoin deflationary. Well, I don't know if that one is proven yet. But here's the difference, okay, is that if the U.S. economy was based on Bitcoin during the coronavirus pandemic, then we would still be in a dismal depression. That's the reality of the situation. Whereas with the U.S. dollar, we can adjust the properties of the currency based on the conditions. That is what kills the Bitcoin. They do print, and that is a theoretical long-term problem. It is. Everybody's doing that, though. They're all in the same boat, so I don't know what happens there. Well, they do like inflationary cryptocurrencies. No. So, for instance, then you get people like Elon Musk that say, oh, okay, so we should have an inflationary currency. Then people will want to use the currency. That's a different problem. Okay, so there's problem number one, which is Bitcoin is deflationary. You know, Bitcoin always has, or is designed to go up, rather. Okay, we put it that way. Bitcoin is designed to increase in value over time, and therefore people will want to hold the currency. And that's not what you want for an economy. You want people to spend it. That's problem number one. But I'm saying it's even more nuanced than that. That you need to be able to adjust it based on the financial conditions. So if you had a currency where the amount of currency created per day was based on let's say there was a board, I'm going to design a currency here, right? Let's say that we created like a board, and maybe the government could, appoint people onto that board, so that we appoint the smartest economists in the world to figure out what is the effective amount of money to print. And then we could adjust how much money gets created every day based on the financial conditions, right? Then maybe you could do something with cryptocurrency. But guess what? Then what you actually have then at that point is you have the digital dollar, and that's what's going to happen. So you're going to create the digital dollar, and then there's no point to have Bitcoin. Either Hater says, I think it's a matter of Greece happening again. The first country that blinks on printing has to be big enough to topple the Jenga stack. I love your statist stand. Well, listen, Hydro, it's not like a... I think that there's this tendency to sit down and be like, okay, if you don't like this is the attitude in the cryptocurrency world. Oh, it's kind of like that. What do they call it? These really woke activists. If you're a woman or a minority, and you come in and you say, well, all of this woke stuff is nonsense, then they say, oh, you just have internalized repression, internalized misogyny, that sort of a thing. I think it's the same thing in the cryptocurrency sphere. They come in and they say, oh, well, you're just saying that because the globalists that are taking advantage of us have conditioned you to, support the existing system, yada yada yada. No, that's not it at all. I am all in favor of destroying parts of the current hierarchy that are harmful. Okay, there's a process to do that, mind you. I'm not talking about revolution, but yeah, we should make changes to make financial markets more efficient, work better for average people, etc., etc. No. Why do I take the position that I do? Because it's just the economic reality, guys. Like, you can push Bitcoin all you want. Like, here's the thing. You're going to get a country that is going to say, oh, you know what? We're just going to adopt Bitcoin as our currency. And then what's going to happen? The inevitable 80% decline in Bitcoin is going to come, and that country will be decimated. You can't help it. Because there is a fundamental problem with having a deflationary currency. And how do we know that? This isn't just theory. How do we know that? Because we have a good 200-300 years worth of economic history to look back on and see that when we had a currency that was based on the gold standard, anytime that something happened with the price of gold that sent the price of gold cratering, like another country deciding to sell their gold, the U.S. economy took a huge hit and it was extremely difficult to get it going again. So it's the ability to creating a currency that you can manage based on the financial conditions is the greatest financial innovation of all time. And Bitcoin is literally premised on eliminating the greatest financial innovation of all time. Right? So that's where I say, like, people say Bitcoin is going to take over the world, that it's going to become the dominant world currency. It literally can't happen. I'm not just saying that's not going to happen. That's extremely unlikely. I'm saying the laws of economics make it so that literally can't happen. Good morning, Ace. You missed all the fun. Why didn't you wake up early for the jobs number? Come on. I didn't even know what I want to think about the E-mini over here. Like, so we have a good idea of where we think bonds can go, but what do you think about the E-mini, man? Like, E-mini new all-time high today? 42.30 maybe? I guess we could do that. 42.30. Too lazy as of late. Well, you know what? It's summer. It's summer, Ace. There you go. Bitcoin is not supposed to be a currency anymore. We both know that. Very good. Very good. So, the original goal of the Satoshi white paper has basically been proven to be an unrealistic goal. And so they've moved the goalposts to now it is a quote unquote store of value. Right? Here's the problem with that. Why would it be a store of value? People seem to think that, we just all decided that we're going to store our value in this thing, and because we all agreed to it, that's the way. I mean, that is the naive view of economics, right? That's the cynical view of economics. It's all made up, and it's only has power because we've all agreed that it has for it to have it, right? But that's really not actually the case. Okay, even when you look at gold in the time period when gold was a valuable thing, there's reasons why it can be that way, right? Like, gold was valuable because it was something that could be used for transactions, and because it was so widely desired, it could be used as a currency of sorts, or it could be used to back a currency of sorts, right? what do you have about a cryptocurrency that would allow it to do that? Well, the original Satoshi white paper had an answer to that. I think Satoshi actually understood that part, which is that there is more utility in a digital currency than there is in a paper fiat currency. And therefore, people will want to use the digital currency. People will want to use the digital currency. But if you turn around and you say, well, we're not actually going to be used, we're just going to be a store of value, you are in effect destroying your own value. You know what I mean? And this is where my own model comes into work, because my own model basically is, because remember, I'm all about, you got to know what something's worth, or at least you have to attempt to know what something is worth. And that's the issue with Bitcoin, is everybody's like, well, how do you actually value something? Well, I say the only reason that it would be worth anything is because you can use it. So we can look at how much money is actually being put through that system to determine how it works. How much it's worth. And you know what? When you put that into a model, it actually predicts Bitcoin's price behavior extremely accurately, particularly at tops and bottoms. And that's how we knew that, starting, even before Elon Musk started talking about it, that the cryptocurrency was overvalued and that there was going to be a crash. And yeah, we had a 50% crash. And normally we have an 80 to 90% crash, and probably not done. Probably not done. But, speculation can always trump value, right? The order flow will trump fundamental value, rather. So there was a couple of tweets here that I wanted to go back and read. Brannigan thinks that they will still talking about tapering in Fed meetings. You say what crypto is in 2021 because most people are stuck in 2018? No, actually, you know who's stuck in 2018? Well, really 2016, 2017. It's the cryptocurrency market. That's what really happened back in 2017, was that they sat down and they said, okay, we need to do this thing in order to move forward. And a group of people said no, because we don't make as much money that way. And so they intentionally hobbled the currency and prevented them from being able to make any of the innovations that would actually allow them to continue to increase their market share. And as such, now central banks are already going to make their own digital currencies, which will eliminate the primary use case for Bitcoin and so forth, and making Bitcoin only about trying to get away from the dollar. At which point you have to wonder, why would I use Bitcoin and not some other store of value? A store of value that doesn't decline 50% in one day, right? They miss their opportunity. Like, that's the funny thing about it. Were you able to improve your robots? Well, you know what? By the way, I got to turn this one on. So most of the robots that I was testing, didn't make it through. I should probably go back and look at them, because I'm wondering if that time period was just a drawdown for them. But I also think that for some of them, there's kind of differences between, live data and not, that are problematic. You know what I mean? So most of them didn't go through, but I still have this one that I'm really focused on, and I made some changes to him recently, and those seem to make sense, or those seem to help a lot. I'm not so sure that he's consistent enough for me to want to put him on a live account yet, though. So then I've been thinking about it, like I want to move off of AMP Should I go to Ninja Trader brokerage where I'd be able to start doing the bots live? Well, I don't know. I'm not super bullish on Jay's prospects, because that just comes back to this whole thing that there's a bunch of stuff that I can factor in that the robot can't. Like the robot doesn't know at the moment that we just had this non-farms payroll report that was highly anticipated and is a really big deal and all that sort of stuff, right? And how you factor that in to an algorithm is like, that's a really complex thing. So I'm like, well, I could move over to Ninja Trader, but I'm not sure if I would actually use the thing that is like the primary reason that I want to go over there. So I'm kind of leaning towards EdgeClear again. I think on Monday I'm going to email them and ask them some questions. So I can still use Ninja Trader the way that I'm using it today over at EdgeClear. Seems like there's no advantage to AMP that would keep me at AMP over EdgeClear. Right now is time to understand what distributed computing is and how good it is. Well, there are a lot of good things about distributed computing. It's too bad that they basically destroyed all of the parts about Bitcoin that were distributed computing. Paul Krugman basically saying, my main takeaway from this jobs report is that you can't just flip a switch and turn the economy back on. Recovery is messy and it's going to take more time than anyone would like. That's what their take is. And meanwhile, everybody else is looking at it and saying, maybe actually giving people incentives to not work was a bad idea. Bitcoin is just a tiny thing in the universe. Well, I'm really starting to think this time around now that we're going to have this. I think that Bitcoin is still due for a little bit more of a decline, but this whole flippening, I think that the flippening should be on the table. That it's more likely this next cycle. Now, Ethereum still has the throughput issues, but it's better than Bitcoin. The issue is that when Bitcoin falls apart, that really changes the calculus for a lot of people, right? Because for a lot of lay people, they just look at it and they say, yeah, but Bitcoin just always goes up. So there's a false consensus argument getting them into Bitcoin, especially during these market tops, because they think, well, even if I buy in at the top and I get it wrong, I can just hold it forever. But if Bitcoin gets flipped and then is no longer the dominant currency, and if we're honest, if it stops being the dominant currency, the dominant cryptocurrency, that could really, really hurt its value, right? Then all of a sudden you get into this situation where it's like, it doesn't always go up, right? It changes things a lot. But Seth, the stocks only go up? Well, it's a key factor behind how people invest Ether, Ader, isn't it? Right? We all say just invest in the index fund because over a 30-year period, you're always going to make a return on your investment. Yeah. And if we had a period where the markets were down over a 30 to 40-year period, that would change a lot of how the investing world works. Please don't talk down. I'm just look, man. It's not like I have some agenda or something. I'm just telling you the way that the world works, man. It's just what's going to happen, I think, is incredibly predictable at this point. Because there are just laws of economics. There are things about the way that finance works that are just completely contrary to the whole idea of Bitcoin. But Bitcoin was based on flawed premises. I need to blow my nose here. I'll be right back. Did you take your vaccine? Why are you asking me that? Because I blew my nose? I already had the coronavirus. Well, so here's the funny thing. So if you want to talk about Bitcoin is just one crypto. Okay. There are four main problems with cryptocurrencies. Okay. Well, with Bitcoin in particular, the four major issues. Number one is it doesn't have enough throughput. That to me is the biggest problem. Okay. Now there are currencies that solve that. XRP, Bitcoin Cash, these all do these things better. Man, my nose, it's just so bad right now. Okay, Bitcoin has that problem. Many other cryptocurrencies don't. Okay, next biggest problem, energy usage. Okay, Bitcoin has that problem. Ethereum doesn't have that problem, but Ethereum has the throughput problem. So, right. Next big problem is you can't adjust to the financial conditions. Okay. So, Maker, is that what it's called? They're trying to solve that problem. Okay. But they're on Ethereum, so they have the throughput issue. You know what I'm saying? So just among those three problems, there is the only currency that really solves those problems. Well, actually, no, I don't think that there is one that solves all of them. Probably one of the better solutions is Nano. Okay, but they don't have the dynamic supply. If you combine Nano with Maker, you might have something pretty good, right? But then there's the fourth problem. What's the fourth problem? Lack of sovereign support. So the issue that you have here is that Bitcoin was the dominant cryptocurrency. And in 2017, they had an opportunity to continue pushing forward, and they didn't. And because they didn't keep pushing forward, now state governments already have the jump on them. So it's already on the slate. They're developing new cryptocurrencies. And so the issue is that since you don't already have a good to go solution already, the state governments are going to beat them to it. When I go and I have a digital dollar solves all of those problems. You will be able to handle the number of transactions. You'll be able to have something that's not based on mining, so it doesn't use up a ton of energy. You will be able to adjust the supply based on the market conditions. And because it's owned by the government, it will have the full sovereign support. And so you solve all four problems. And the issue is that because Bitcoin is a dominant cryptocurrency right now, it will be impossible for any cryptocurrency to get to that point and get those four key points before the US dollar is live. Lack of sovereign support, that's the perceived benefit. But it is a real problem, isn't it? Like we all know that if Bitcoin got to the point where it was popular enough to pose a threat to the dollar, that the US government would just ban it. and you say, well, you can't ban cryptocurrency because you can't stop. Well, you can't stop people from mining it. You can't stop people from using it for transactions, except for that you can't really use it for transactions anyways. So if the US banned it, yeah, it would be a problem, because how are you going to get your dollars into Bitcoins? Like, the whole thing is based on the dollar ecosystem. The only reason that Bitcoin is worth anything is because you can convert your dollars into Bitcoins. If the US government banned that, it won't be worth anything. It'll just crash. In most cases, 2021 crypto businesses use your crypto for voting on token economics. But this is the thing, is that the entire Bitcoin ecosystem is based on we don't like the Federal Reserve. Like, you get what I mean? It's like, if you have an NBA team and you say, I don't like Michael Jordan, so I'm going to make an NBA team that's totally premised on that we don't like anything about Michael Jordan. So we're not going to do any of the cool move. We're not going to do the Jordan fadeaway jumper. We're not going to do the Jordan layup. All of those things that makes Jordan good, we're not going to do. And I'm going to make this NBA team that is just about not being Michael Jordan, okay? And then you take that NBA team and you try and pit that NBA team against Michael Jordan, and here's the problem. Michael Jordan is the best basketball player of all time, and has completely changed the game, and you're trying to compete with him by not using any of his innovations. He's going to kick your ass every time. Do you see the problem? Like, the problem is that that fractional banking reserves, fiat currency systems work and are extremely effective, and are much more effective than any of the monetary systems that we had in previous centuries. That's why I keep saying it's not like I have some agenda or anything. It's just like, this is just the economic reality, guys. I love talking about Bitcoin. I do, to be honest. I think about it a lot. Yeah, Treasury's still out. They haven't beaten out the high yet, so that's why there's so much size there at 29.5, but you clearly don't know. But this is the other funny thing, is that I bet you tell me something that I don't know about cryptocurrencies, right? Like, you can come in and you can say you have an opinion about something that's wrong, but like, can you state an actual objective fact about it that would contradict what I'm saying? It's not like it's all opinion. I don't just make this stuff up, right? Like, I spend almost all of my free time researching and reading about this stuff. Like, that's my job, basically. I know I don't make a ton of money from the YouTube channel, but I treat it like a job. I do my research. I get every piece of information that is available to me on this sort of subject. In fact, one of the things that really bothers me these days is that there's this push, like, it comes from Gary Vee. Oh my gosh, I don't like this Gary Vee guy, because his whole thing is like, well, I sucked in school and I didn't go to school and I was successful anyways, and you don't really need to go to. So there's this whole push out there that like school is not actually a valuable investment. Well, in some cases, school has not been a valuable investment for many people. But the biggest frustration in my life is, people say, oh, you can just find all of this stuff for free online. But the reality of the situation is that when it really comes down to highly advanced, specialized knowledge, it is not on the internet. It is not on the internet, and there is still knowledge that you're only going to get from going into that specialized field, and sometimes that involves going to school. So I can tell you straight up, there are things that I've learned about trading and about finance, particularly as it pertains to efficient execution, that you can go to school and you can learn. And there are hundreds of people. The things that I share with you guys here on this channel that I tend to be like, these are things that like retail traders don't understand that can completely change your view of trading. Okay. And it seems like I'm like the only person that knows about it, but there are hundreds and thousands of people that go to school and learn these things in school and then go and work for financial institutions. And we just never talk to them. Right. And you only learn that stuff is not just sitting out there on the internet. Otherwise, all of the guys on Reddit would be picking it up and learning it. It's like this specialized knowledge it's not just on the internet. You can find university books on the internet. Well, I learned from a book. But I guarantee you that I would be a lot further ahead if I had gone to school. And there's some of this information that you're only going to learn if you go to an institution. And the only reason that I knew that stuff was even there was because I had talked to people at a bank. So then you get into this other issue, which is like, you're going to learn it all online. You're not going to know what to look for. There are specialized knowledge that's just you're not going to get just from reading on the internet. This just Not even talking about how a crypto business works. Well, here's how a crypto business works: is you start a cryptocurrency, you give yourselves a big stake of it, then you put it out on the market, and then you use that chunk of change that you make from it. Maybe you start your own mining operations or whatever, and then you don't actually do anything. Oh my gosh. This is something that really was driving me crazy. It says Cardano. Okay, so there are problems with Cardano. This one has some institutional support. Isn't Cardano the one that IBM was all about? No, that's Stellar. Stellar's different. No. Okay, so here's the first problem. Cardano runs on Haskell. Haskell sucks, dude. Like, Haskell is like an academic language where it was like they had all of these great ideas about, that what would be so great to use Haskell, but in practice using it sucks and nobody wants to use it. And that's like a big thing. And Cardano uses Haskell. But then the funny thing about Cardano is that they're only just now like getting their testnet up. Like, they're only just now getting their testnet up. And the infrastructure that they got up this past weekend to actually like start testing Cardano is lame. It's not very impressive. So like, here you have this currency. It's like one of the most valued cryptocurrencies. And I think that based on how far they are in the development process, that valuation is not justified at all. Because nobody's going to want to build stuff on that. Nobody's going to want to develop in Haskell. And you can use other stuff, but it's like there's problems with it. So just because somebody has an opinion that is different from yours doesn't mean that they don't know what they're talking about. You would have to point out a specific piece of information that they don't have, which you haven't done. Right? Like we did this the other day with Ace, right? So he would say something and then we would say, okay, if you really knew what you're talking about, you wouldn't say that because, and then you would go and post the actual information. It's misinformed, but you're not able to post any. You see, why don't you make an actual argument? Right? It's really easy. You see the cognitive dissonance there? Like, this is how this works, is I have an opinion. Somebody says something that contradicts that opinion. The natural human reaction is to go, well, you're wrong. This person must be clueless. Because clearly, the only reason that anybody would have an opinion that's different from yours is because they just don't understand the way that things really are. That's just the knee-jerk reaction. But the reality is that you would have to, you should start probing and being like, okay, what do you think about this thing and this thing? And it's like, oh, you didn't know about that. This is usually what happens, right? So we go into, oh, there's just, this whole thing that the government is interested in aliens is ridiculous. And then you say, oh, yeah, well, but did you know that they had a whole program to look into this, and they had a guy that looked into it for like from 2004 up until 2018, and then since 2018 they had an even more thorough investigation about it. Oh, you didn't know that? Oh, you see what I mean? You're okay. It's what you said was accurate. One of the things on that argument, Ace, is that I don't think you understood my thesis properly. Right? Because I start talking about it, the obvious assumption is, oh, he thinks that they're going to reveal that they're aliens. That was never my point. The story is that the government is taking unidentified aerial phenomenon much more seriously. And there are a lot of really bizarre stories that they can't explain. And we're all really excited to learn more information about that. That was the whole point, right? By the way, Sunday Driver, when you came in, I was meant to say hi, but I was like so busy with something. But I haven't seen you in a while, and I'm glad to see you back. Pluto the Maniac says, what is the core principle of market microstructure? You are already working with the order book. What else do you want? Okay, so market microstructure is actually a much more broad subject than we may initially give it credit for, because market microstructure is really just about how does the market actually function, and how do those functions possibly influence the way that markets behave, right? That's market microstructure. So there are certain things that we have learned, certain behaviors that we have learned, and it can include the order book, but it doesn't necessarily just mean that the order book. Do you get what I mean? So the reason why I use the term market microstructure is because we're uninformed traders. Well, we're not uninformed traders, but sometimes we're uninformed traders. I always say that the goal is you want to be the most informed trader that you can, but it's not always possible for a retail trader to be in that position, right? So sometimes you're going to try and use strategies that are based on uninformed trading. So if you're going to do that, there's this whole thing of like, oh, there's patterns that people tend to do and things like that. And what we've learned, or what you'll learn when you start doing the back testing, is all of the popular things that people say are like common market behaviors that happen because of humans' market psychology or whatever the deal is, don't work. That the market, that the behavior changes too much for it to do that. So if you're going to do trading that's based on uninformed trading, it would be preferable that your edge is based on a fundamental property of the market that can't change, right? So you can find an inefficiency that exists as an inefficiency because of the structure of the market. And there are inefficiencies of that manner. And the school of study that is basically dedicated towards finding inefficiencies in the way that the market as a whole is structured is called market microstructure. Okay. So when you start searching about market microstructure, you'll learn all sorts of things about the way that the market behaves that we're kind of like, now it might not necessarily be something that you're able to take advantage of, but you understand the market so much better. Okay. So the biggest wow revelation that I think would make the biggest difference to retail traders is the understanding that when there is an inefficiency in the market, that they have models of estimating what the optimal number of contracts to trade that inefficiency is, to in effect completely eliminate that inefficiency from the market without cluing in the market that it's there. So when you understand that, this whole idea of you should just watch the tape and look for a big guy and try and take his side of the trade and just follow him is ridiculous. It's absolutely insane, stupid to try and trade that way, because if he's that informed, he's going to know the optimal number of contracts to trade, and it's going to be difficult to front run him. Basically, as soon as you realize that that's what's going on, the edge is probably already gone. So that's the biggest one that I talk about on here all the time. In effect, the general retail trader belief is that the key to making money in the stock market is following other people is objectively false. That's the biggest thing that I think you can take from market microstructure. What should you do then if the markets are efficient? If you believe that, in my opinion, if markets are efficient, then you shouldn't trade. If markets are efficient, then the only thing that you can do is just be invested in the S&P 500 and buy and hold. Okay, big but. The next thing that we learned from microstructure that is useful to retail traders is that market microstructure proves that markets are not efficient. That markets are moved based off of order flow, and that inefficiencies can exist and can be exploited essentially. And even more so than that there are inefficiencies that are inherent in the structure of the market. And when we come into a limit order book, the biggest one is the square root law, that there is basically a limit on how much you can trade at any one given time, because even though there might be more latent liquidity than what is being shown on the DOM, there is like a limit. And they can calculate it a certain point at which it's difficult for them to push it any further. And that's why you get this kind of behavior like we saw over here in the Treasury today. It's a really great example. It's kind of hard to read the order flow in a situation like that. But what happened here? We had a piece of news. A bunch of people tried to get in, and there is a limit on how far it can go. They literally, the order book is like not capable of it moving much further unless there is like a complete dislocation in the market complete. There is a point at which there can be a complete dislocation. Just understand. But generally speaking, there is a limit. And when you get to that limit, then the sign change rule comes into play. You've left this wake behind you. You're going to get sucked back down into the vacuum. Right? So here on a move like this, now that you understand all of those things, now you can start to talk about gaming it out, right? We know because of the size of the move that there's going to be a vacuum of some sort, right? So it comes back down here to here. Okay. What do we do? Well, it depends. It depends on the piece of news. Today was a little bit more nuanced and vague, but I think that you could sit here and you could say, well, no, the treasury yields should decline from here. Anyways, so when it comes back to that spot, you want to buy it. You want to buy it because that's an inefficient. That happened because of an inefficiency. That happened because of an inefficiency that we can describe mathematically. Right? And that's why, even though I was really mad about how I had to average into it, that I stuck with it because I knew that in all probability we were going to move back up. And then I started doing my analysis based on the past week and what the piece of news was to determine that probably we could go up much further. Right? So that's what we learned from market microstructure that can be useful to you. Note, though, that we're only able to do that kind of analysis because we are informed, right? So we know why the big move is happening, and then we can use the market microstructure to our advantage. I don't know if it's like a hair here or something, but my nose itches like crazy right now. I'm going to try blowing my nose again. You don't want to see this. Okay. Hopefully that I cleaned it out enough that it will stop itching. So Vlad is saying there, poor dollar. Look at this over here. Okay, so here's the dollar index. You can see the curve, can't you? You can see the square root law. Okay. That's kind of primarily happening because of the euro. Right? So they're about to come to their limit. There might be like a little pullback and then. Okay. But look at the yen. Look at the yen. Well, maybe, I don't know. The yen looks like it is just being that it may be experiencing the quote unquote dislocation. The boob drawings. I don't know if that's a boob. I don't know what you would describe that. Just remember, square root law. Square root law says that the size of the meta order, this is the size. This is the impact. There's a certain point at which adding more size doesn't increase your impact. Except for that, there can be a dislocation where the markets just completely break down. And I wonder if that's what's happening in the 6J. So let's come back over here. When we look at the 6J, level 2. Okay, well, the order book looks healthy enough. I suppose we wouldn't be able to tell just from this order book, though, because it's, it's the foreign currency flows that are coming through. But looks like some cray-cray going on in the 6J. Biden is killing the job market. I think so. I mean, it's not Biden really, though. That's the funny thing about it. I find it amusing, really. I find it amusing, really. Joe Biden did not create the policy that is holding the economy back right now. All of these decisions were made when Donald Trump was still president. Like, Donald Trump signed those bills. It's just that the situation was so dire, the Democrats insisted on certain things being in there, and they insisted on certain other things not being in there. And that's what brought us to the situation that we're in. So it's the Democrats' fault for sure. But who's going to end up getting the blame for it? Joe Biden. So I think it's just incredibly ironic. Pluto, the maniac, says because average size is relative. Well, so that's a good theory, Pluto. And when they were looking at this, that was one of the theories that they had. Was they said, maybe it's just because once an order gets so big that it just stops having meaning to people. That there's a certain point at which people can't even comprehend that, it's this is bigger than this, because the numbers become so big that we can't even handle it in our head, right? But then there was the 2007 study, I think it was. It was relatively recent, where they started getting into Walrusian auctions and, basically modeling the market starting with a Walrusian auction. A Walrusian auction is basically like, you're going to have an auction and everybody puts their bids and offers ahead of time. And then the market maker guy takes all of those and says, okay, these guys get matched up together, these guys get matched up together, and then these are the bids and the offers that don't get filled. Right. But so, and when they made a model like that factored in latent liquidity in the order book. So this liquidity that you don't see, but then ends up being there after it trades, they basically were trying to model that. And when they started modeling that, they found the square root law in the math. So the prevailing theory at the moment is that the square root law is an inherent inefficiency associated with using an order book to trade. Biden screaming for tax hikes and kill the rich schemes aren't helping. Yeah, it's not helping. I don't know if it's really had that huge of an effect, though. I was actually, when was it? Was it last week? Well, actually, there was even a day this past week, right? When markets jumped because Joe Biden was saying, they were going to compromise on the corporate tax rate, But it's not the first move that we've seen that was all based on Biden, a politician who made his family rich, wants to tax them more. Okay, yeah. Oh, did I just get filled? Easy. Okay. Oh, I still had 2 on, so I need to take another off. Cool. I'm done. Anyways, there was a couple of moves that the markets made based on what they thought Biden's tax policy was going to be. And every time that happens, I'm just looking at it and I'm like, who cares? It's not going to pass. So it seems like that the market has made short-term moves based off of Biden screaming for tax hikes and kill the rich schemes. But I am personally not convinced that it has had a lasting effect yet. I think I'm talking too much out of my nose. It's like the vibrations make my nose itch. It's like, Funny, the same people trying to short this thing are the same ones holding it up. So can I point out another thing that would be important for you to know? And I'm going to share an edge with you. I'm going to share a really big edge with you. An important edge that I'm going to bet that a large number of you are not taking advantage of. Here's the move in the S&P 500. Okay. Big move up, vacuum, sideways. It keeps going up, but it's a little bit volatile here, right? It's a little bit tricksy. You might have gotten long off of the open and then it come almost all the way back to your entry. And that's long after the news already happened. Although I do think they probably continue to go up. Okay. Now you look at it in the treasury. Well, okay, so there was the vacuum still, but then after that, okay, well, how big of a pullback was this? 29 to, let's say 26. So 6 ticks, 7 ticks. So there was a pullback of 7 ticks, but other than that, it almost never ticked against you. So number one, there are certain situations where it's just easier to trade it in the 10-year treasury because of the liquidity and everything else involved with that. But also, you can look at the piece of news, and sometimes the piece of news has a more clear effect on the treasuries than it does on the broader market. And in fact, I would argue that especially for things like the jobs numbers, that is definitely true. We can look at this and it's very clear to us that the Federal Reserve cannot increase interest rates. And so the treasuries are going to buy on this. Whereas for the E-mini, I think that we can make that same determination, but the effect that it actually has is a little bit less clear. And so the action that you get in the E-mini is a little bit less clear, right? Even though you still could have made money on both of them, right? But the treasury was definitely a better trade, right? So there's one that I give to you. And this is where it comes down into like, oh, the treasuries are so slow, etc., etc., etc. Well, here's the example of exactly where the treasuries can be an advantage. That liquidity is an advantage to you as a retail trader because you can come in and you can just take it wherever you want and just ride the wave. You've just got to be worried about that, getting stuck in that liquidity vacuum. That's the thing that you've got to be worried about. Well, I've done a lot of talking today. Do we have more? No, we don't. New York Fed Treasury purchases 7 to 10 years comes out at 8:30, huh? City's commercial banking business is exploding. 42.35. Oh, yeah, no, let's go and look at that. So you think liquidity is directly related to edge? Not necessarily. I'm just saying that there are situations where trading the most liquid instrument is very beneficial to you. But it's very situational, right? Because the opposite is going to be true if you're trying to trade, like especially if you're trading in, you're trying to do arbitrage or some sort of liquidity model of sorts to try and make money off of, then having a really thin instrument is probably better, right? Because in a situation like that, being first in line is really important. Posted a screenshot of AMP's quant tower. And where in the lobby? I don't see. Oh, here it is. Yeah, that's the same. Yeah. So there's a couple of things about their DOM that are kind of interesting. So, for instance, this tries to tell you how many traders there are in line. There's also these extra columns like that will tell you like the cumulative volume in each direction and stuff like that. I wouldn't say that it's perfect, but there's certainly some things in there that are kind of cool. The issue with Quant Tower overall is just that it's so new, right? It's just not a super mature platform yet. With everyone going back to work, we should be seeing million-plus job numbers month after month, and construction actually lost jobs. Yeah, because for construction wages, like, why would you work? You can just stay, and that's hard work. Yeah. No, there is no question about it that, in my mind at least, there's no question about it that the extended enhanced employment benefits are hampering job creation. No question about it in my mind. Pluto says, nice talking to you. We'll talk as long as you're asking the questions that I think are beneficial to talk to people about. When you start trolling me, then I'm going to ban you again. Or saying false things. I tell you, there's this guy. It reminds me. Because there's this other person on the Futures IO board right now. You know what I'm talking about? I'm going to use names, but if you've gone and looked at Futures IO, you've got to know who I'm talking about. And they sure, yeah. And they occasionally say things that are false. I've seen him say things that I'm pretty sure are objectively false. And like, I would point it out and post like evidence that it's false. And then he just doesn't say anything about it. I think that this guy is like a 14-year-old kid. Like, I'm dead serious. I think he's a kid. Because he posts way too much. And it's like really bad grammar and everything. It looks like a kid to me. Let's go back and see if they ever answered that thread. I want to know. I want to see them respond. He's got this one thread where he's just posted a ton of bullcrap and like nobody's reading it. But why are you arguing with him? Well, so it was in one particular thread. There was one or two particular threads where he said something that I thought was objectively false. And I like started to kind of try and test him. So he had this way of doing a stop that I was like, well, that's kind of dumb. And here's why doing it that way doesn't really make much sense. But I didn't tell him like, here's why doing it that way doesn't make much sense. I posted it to him and tried to get him to realize on his own why it was dumb. But it just like went over his head. Like, he even messaged me about it. I was like, well, so specifically what the thing was is he was wanting to do like a stop based on the average true range, but the period of the average true range changed as the session went along, so that it was basically always the average true range going back to the beginning of the session. And the issue with that is that you're just constantly increasing your data set. So the further along you get, the harder it is for that value to change, right? So that's why it kind of ends up being not very useful. And I tried to get him to realize that, and he just didn't seem to care. I thought it was funny, and me, but you know, so that was the way that it started. But in between all of that, he made a ton of posts. Like, that was the thing, is he made like 5 or 6 posts that were like long and wandering, and I'm like, what the hell? And he will miss punctuation. He will miss capitalizing the beginning of sentences. They're like poorly formatted, and it's a really, and I'm like, this. And after that, I was like, this got to be a kid, man. It's got to be, because it's so weird. It's got to be a kid that like their dad actually works in the industry and actually does know things or something. And so he is parroting things that his dad told him, but he doesn't completely understand them. Use a 1-period ATR just to eyeball high and low value. Sunday, it doesn't read every message out. It never did. So did I never show you this? So here's my, oh look, we got the mirror effect. Okay, here's my, oh, we can turn this back on, by the way. So here's my little interface. And you see every message that comes through has a read button, and then there's an auto read button. So if I click the auto read button, then every message that you guys send in will be read back to me. But we haven't been able to use that for a long time. It's been a while since you disappeared for almost, oh man, it seems like so. Well, it hasn't been that long. It's only been 6 months, huh, Sunday? You kind of disappeared after the election. But yeah, since that time period, like when the GameStop thing came along, we started to get a lot more activity in chat. And so it kind of turned into that if I had that on, I was just always getting interrupted. So I turned the auto read off for a while. Now that we're kind of getting back into the summer, there'll be some days where we can turn it back on. But I can always just like read them as one-offs, right?
Sunday Driver says you turned the voice off.
You even still have the British accent. That's great. RJ Will says I hate it. Well, I don't particularly like it either. Like that's the thing. I didn't create it per se. Here's the thing. When I created it, I didn't make that like, oh, I think that they will absolutely love to hear all of their messages read back out to them. In fact, it probably should be annoying because if you're sitting there watching and you're actually reading the chat, you're going to read the chat and then you're going to hear it later anyways. Right? I did it because I want to be able to keep track of chat without having to look over there all the time. So during times when that's necessary, it is really, really useful. And then I was just kind of like, oh, well, we can add all of these cool features to make it fun anyways. So I'm pretty happy with how it turned out overall. I wish that it was a little bit more responsive. Like, I wish that YouTube had a socket. I wish that the responses that they sent back to me when I asked for a reading, that it did it faster. But what you gonna do? Have they not moved much? Oh, well, they've moved up one tick. Moved up one tick. I don't think that the treasury is done here per se. I only took my profit because it was 1,000, but when I got out, there was a pretty big iceberg there too. It was kind of weird. So I don't know. It was kind of interesting. Nope, I didn't set that Discord thing back correctly. Oh yeah, that's a good. So this guy on Twitter, is it Carl? I think it was Carl Quintilla was saying, here's some of these charts from the .com boom, right? This one up to 140. Like these are comparable to like the GameStops and everything, right? So GameStop is still elevated, and so some people are like, oh yeah, it's gonna keep going. No. Listen, if you hold GameStop for 10 years, it's not going to be worth what it is today. I almost guarantee it. How is just, I guess you could go short. It's just a question of how long you could hold on. We still got 30 minutes, guys. Like, we took our profits. What are we going to do for 30 minutes? Should have done a poll beforehand whether we thought it was going to be up or down. I think I would have gone long, though, so I was a little surprised when it came out and it moved up like that. Really, probably the best outcome for the markets, though, you know. FOMC blackout period begins tomorrow? What does that mean? Does that mean that they can't talk? Well, it means that there is FOMC next week, huh? I forgot about that. Oh, no, it's not next. No, why are they saying FOMC blackout period? What does that mean? I've literally never seen that. Okay. Federal Reserve policy limits the extent to which FOMC participants and staff can speak publicly or grant interviews during Federal Reserve blackout periods. And one of them starts June 5th through the 17th. And then there's FOMC on the 16th. Oh, I see. So it's 2 weeks before the FOMC. They're not allowed to comment. Oh, that? I wish I had known that sooner. I've learned something. Then we need to put that in. Where is my document? I need to put that in day trading manual. What a slow day compared to yesterday morning. Wow. It was pretty great up until now, huh? When I got out, things really got a lot boring after I got out, didn't it? Sometimes I have to wonder, like, am I that good, or am I like the axe now? All of the top traders on Wall Street are watching Seth's stream to see what he does, where markets will turn next. Oh, he got out and he's done trading for the day? Well, that must mean most of the opportunity is gone. I guess we're going to go home now. You got the short off open? not sure what you mean by that. Man, I'm looking back through this day trading book that I've been writing. I wrote 5 pages just on topics. Just five pages of just the outline. Oh, there's one day. Let's see that. Let's read this. What do we think? That's interesting. I'm reading my intro bit, and I was more focused on trying to explain why I would be doing it the way that I am than anything else. And I'm not even sure if that stuff applies anymore. So I should probably just rewrite that. $17.60 tape. I wonder, RJ, Will, do you notice difficulty with that when the markets get really fast? No, not precisely in that if it's fast, everything is a problem. Yeah. Tommy says, have you written anything about the DNA of the instruments? Yes. Well, I haven't written it, but it's planned, yes. I need to split this out. How do I do this? Futures. I'm just gonna do this. Yes, ZN. ZB. Gold. What else do we got? RTY. Oh, oil, of course. So my intention in this section here is to describe not only the actual contract properties and how those will affect the behavior of the instrument, but just kind of the oddities of that market. So that section would probably be a little bit more opinion, but we could go in and try and tease some things out about them. So a lot of what I was planning on doing is like, okay, here's everything that you can know about the non-farms report. So in here, a note that a bad non-farms can often be good for equity indexes. Okay. So I went through and I got all of the different numbers that you can possibly get in treasury auctions. I don't know if these are... No, I have those listed out like that. Fed speakers. So that was the note that I wanted to make there, is that Fed speakers are not allowed to speak publicly for 2 weeks before the FOMC. That's important. Okay. Then I talk about the different types of breaking news, politics, market participants, treasuries, corporate offerings. These are all the different sorts of things that can happen. Oh, you see, I don't have it like these should probably all be like indented, right? Seasonality is another subject. This here, I've kind of broke those out into that didn't make any sense. Something like that. This should be up here. This should be significant sources of edge. Oh, okay. There you go. That's how I want to produce this. Have this one. Need to go back and hold on. There's this one. It was like oops. There we go. So I got this whole thing about everybody talks about searching for the Holy Grail, and I think that what you should be trying to do is trying to achieve day trading nirvana. And in nirvana, there is basically a template that they have for how you achieve nirvana, and these are the different steps of it, right? And the first one is the right understanding. So that's where I get this stuff. The right understanding is, first you need to understand the efficient market hypothesis has been proven false, but inefficiencies can be removed from the market, especially if there's nothing in the structure to keep them there, right? And then you can come in and here are the different ways that you can get edge. Okay. Maybe this stuff should be at the beginning of the book. There you go. And this is giving me ideas of making a 12-step program for trading. Need to go down through that and expand that out because I can't remember. I have notes somewhere about what should go there. The most expanded part of this will be, though, is understanding all the economic numbers and stuff. But anyways, with the Nirvana thing, so you get these different bits, and the first one is the right understanding, which is the biggest focus. But then there's all this other stuff: right thought, right speech, right action, right livelihood, right effort, mindfulness, concentration. And how these translate into actual things in trading is a little bit unclear in some spots. Oh, I kind of deleted it. It's the Noble Eightfold Path. I had kind of worked out what they were mostly for day trading, but there are a couple of spots where it was kind of like, yeah. So like one of the things is they say that you have the right livelihood. You have to have a livelihood that could never result in harm to other people. Yeah, well, day trading is a zero-sum market, so that one doesn't apply. Maybe it's the sevenfold noble path to trading, is that, No. I think that we can find things to, because it's not just like, here's like, okay, you need to understand how the market works correctly, first of all, right? Next, you need to have a correct market strategy. You need to have a strategy that can actually result in profitability. I forget what right speech was, but then you come into, okay, you need to be able to act on that plan correctly. Right. Right livelihood. I don't know where that one fits in, but effort is definitely like, okay, you've got to be, here are all the things that you've got to be doing consistently to be able to stay on top and keep up with the markets, right? You need to be able to, I know what we should have been doing for the last 30 minutes. Anyways, and then when you're trading, you've got to be able to be focused. Spin the do no harm into donation like aspect. Well, we could say right livelihood is that, like being a trader, that there are certain obligations that you have, right? You don't want to give away your edge, but you do have the obligation to, I think that you do have the obligation to assist other promising traders to be successful, because the end goal is to make with markets more efficient. And we're very, very far away from that. And in fact, in some ways, we've gotten further away from that lately, right? So the more retail traders that we can get in to understand this stuff, the better everybody is in the long run, right? I think if you think about it from the perspective of like there's informed traders and there's market makers and then there's noise traders, the more of those noise traders that we can turn into market makers or informed traders, I think the more efficient the market will be. We want to get those people that are noise and get them into a different category. Anyways, here, let me show you this. I have to find it in my history, I think. What was it called? Let me search. So you were saying spin the do no harm into a donation like aspect where people are supposed to do something good with their earnings. Yeah. That's what it's called. So there's this lovely web game that I found on, because I was thinking, okay, it's like school. Maybe I should be doing stuff to teach my kids over the summer certain things about finance. So what do we get? Well, the Federal Reserve makes some games and stuff, or they have a website that has some games, and this is one of the games that was listed, and it is called Condom If You Can. And the game itself is actually pretty simple, but it's pretty funny the way that they teach this aspect. And it totally makes sense to me. Let's turn the sound off. Wait. Totally makes sense to me why kids would be into it. Oh, no, I need to start over, huh? Let's see here. Start new game. There we go. Restart. Okay, so you come in here, then you have different kinds of tools. So these are the tools that scammers use to trick people into buying into their scam. Phantom riches, source credibility, scarcity, social consensus, and reciprocity. So reciprocity is like, okay, so not so free lunch. Buy them some sandwiches now, and they'll be sure to take your calls later. They'll do almost anything to pay you back. So they're saying that one of the ways that scammers take advantage of you is by giving you free stuff so that you feel like you need to give something back. So trying to spin the do no harm into a donation like aspect. It's like, as long as I'm not spinning it into like, oh, so you need to help me out and give me money or something like that. It's like, but anyways. And they list all these things. So you come in, you get some money. We can come back. These people are susceptible to certain things. So he's susceptible to phantom riches and reciprocity. And we have one of those, but phantom riches seems to be the one that they get more. So let's come in and we will buy the Assurance Urban Investments. Let Assurance hook you up with guaranteed returns on all kinds of city real estate. Buy it. Oh, we want that. Yes. Okay, come back. So now we got this guy, Rich Quick. I want a secret formula that would help me play the stock market, but I think I'm the one who got played. That's what he said. So let's see here. So we can come in here and we can use Assurance Urban Investments. We did 2 damage. Okay, good. And then reciprocity. If, this can do 0 to 2 and we need to do 1 damage of reciprocity to him. There we go. Good job. And we won. Yay. Okay, so this guy, we don't know what it is. My numbers got to come up someday. Oh, I see. He needs scarcity, so I will lose here. Yep, I will. You do not have the correct tools. Okay, so we come back and shop. We need some scarcity. Tulips. Do some scarcity to them. Yay, they're vulnerable to scarcity. And then we do the damage here. And look, we're doing good at it. Huh? Anyways, it's con me if you can. It's kind of fun. And then, as you unlock all of these, then you can read them. The market is hot for these plushies, dolls, and plates. Hurry up before they realize they are worthless. It's so funny. I gotta look at this and I'm like, but even if people played this, they would probably still fall victim to the same kinds of frauds, wouldn't they? Anyways. While I'm at it, I should take a look at my other the other document that I'm working on. How to develop a successful trading strategy. So here's my issue with this one. Maybe you guys have thoughts on this. It's like doing testing. So talk about you've got to test, otherwise you're going to lose money. It's time consuming, so you kind of have to go through a process so that you utilize your testing time the most efficiently. And then I go through how I talk about, okay, I start with a small one, and then I build up bigger as I passes certain kinds of problems, right? How to avoid being overfitting. Okay. And then I get into the fallacies that you run into with the back tests. And look at that. This just goes on and on and on and on. So I'm thinking 1, 2, 3 pages. I think that 3 pages is a good video and that I can keep that down to 10 minutes. And then I've got to get into the maintenance part, which needs to be fleshed out a way more because there's way more than I want to talk about that. Well, I have to go and read through this. Like, I have to read it out loud and see how good of a script it is. Yeah, I cut myself again. By the way, is the Treasury coming back now? Yeah. Interesting. So you're actually getting a lot of selling here in the Treasury. Look at that. Lots of treasuring and the book absorbing it. So sellers probably taking profits here in the Treasury. This is a good day. I wish I could say that like I knocked it out of the park, but I definitely had some mistakes in there. But in the end, we made it out. It was just kind of like, it bothers me when those mistakes are like, well, I don't know if I could trade that one live. It was a little bit too messy. I suppose I could have done it in the E-mini live. Yeah, probably would have been okay. I might have taken it off too early in the E-mini though, if I was doing it live. Okay, well, guys, it is time for me to get going. Should we change the title of this? Non-farms payrolls? Numbers disappoint, maybe? Non-farms payrolls shows job creation still weak. Non-farm disappoints S&P to the moon. That's really what it is, right? Like, I totally understand why, and I totally would have traded it that way, but you got to admit that it's a little bit messed up and kind of is nonsensical at the same time. Because if it's a bad thing, shouldn't it be bad for the S&P 500? But we live in this bizarro world with quantitative easing and everything. But here again, this is why the ability to change the money supply is a good thing. Now, should the Federal Reserve be using those tools to like basically pump up the stock market? That's where I'm kind of like, there's some problems with that. And I don't like what the Federal Reserve is doing. But the ability to change the money supply based on the financial conditions, extremely important. Oil news now? No, I don't have anything on my my list. There's Baker Hughes later today at 9 o'clock. Or, sorry, at 11 o'clock our time. But otherwise. I wonder if it works in reverse because the market is pricing in QE. Potentially yes and potentially no. I actually think that when the Federal Reserve starts tapering, that it will end up being bullish. Because the market is so concerned about them causing things to overheat that when they start to reduce things, like the people that are feeling the pressure from that can be really relieved. So, all right, stay profitable, friends.